Howdy, everybody.
Hi all.
Okay, let's have a check in. As some of my clients will know today, the technology gods weren't completely on my side. I swear, the tech gods, they want to smite me a lot. So, can you just let us know if you can see and hear us? Okay, just pop in the chat box that you can hear us and that you can see us. Okay, great, all okay, lovely. Damien, Alison, nice to see you. Good to see you, Ash. Hey, Kat. Good to know that most people can. Okay, great, Mike. We're all good. Okay. Well, that's always nice to know because it can be a little bit awkward if you have a webinar and people can't hear you or see you. So we always do. It's good to. Hey, Lynn. Nice to see you, Teresa. Well, see you in chat anyway. So. All right, good. Well, we might jump into today's webinar if
off you go, boss.
Yeah. Look, well, we've got a fair bit to get through as usual today, and look, anybody who was on Facebook in the last hour or so, you may have seen my post which suggested that you may like to get a drink for this particular webinar. So I've got myself a nice little glass of wine here. So I told Mick that the reason why I was going to bring a glass of wine was because that I felt it was going to be quite a dry topic today because it's JobKeeper. It's actually a lie. You're giggling, but you don't know I actually have planned a little bit of a game today. So I thought
at my expense.
Absolutely, or expense. Otherwise, I would have told you about it. So here's the thing. I want to tell you a little bit.
Stop it, Damien.
I want to let you know a little bit about what's been happening at the Hendry Group over the past few weeks when it's come to JobKeeper. We are potentially looking at registering JobKeeper as a swear word because it has just caused so much angst in our business. And the reason for that is just because it keeps changing all the time. And so, like, I've actually seen this happen where the accountants are on the phone almost all day, either on the phone or Zoom.
This is yesterday, is it?
No, not what I was going to say. Almost all day, every day recently on the phone or on Zoom talking to people about JobKeeper. And then, of course, every time we get the advice, we're doing it, we think we're on top of it, they go and change the legislation again. And it was feeling like, I know it wasn't exactly like this, but it felt like it was changing pretty much every day.
It's definitely every 2 or 3 days if you look at the list of changes. So, yeah, it's been challenging.
And to the point that quite literally, sometimes our accountants would be on the phone and on Zoom to clients during the day. And during the day, legislation would change. And because they were on the phone and on Zoom, they wouldn't know about the legislative change. And they get to say, well, one of the last calls for the day, and the client on the phone would be telling us about this update in legislation. Because
that's not right.
It's just been full on and constant. And we are working incredible hours to try and keep up with it and be able to do things like this for our clients. Anyway, it has resulted in Mick being a little bit grumpy. And a little bit. And we've had to have...
my shoulders are tight. Does anyone want to give me a message? She's going to touch me still. In Corona world.
So we have had to have a couple of conversations about shifting focus and pivoting. So today what I thought we'd do is we play a little game. And my game is called Wine and Wine. And so for every time during today's, I am your partner, but I also need to help you change your behaviour gently, right? So Mick, you're hard.
50.
Mick, you're hard to hear.
I'm nearly 50. Jeez.
What we want to be able to do for this game is every time Mick bitches, whines, complains, rolls his eyes, makes a face, anything like that. If anybody sees him do that or notices him do that, call it out in the chat box. And for every time he does it, I'm going to take a sip of wine and we'll see how much wine I get through by the end of today's...
Do you have a spare bottle there?
Yeah, well, okay, it might be... she whining? That was whining. First up, we're on.
Okay, we're out.
All right, so there's the game, guys. Please play along because we need to have some fun with JobKeeper because it has been very, very challenging. Now, what we want to do today, look, I'm super keen to get onto some strategy stuff in these sessions because basically today I'm just going to be mixed wing person. I'm really just along for the ride and the booze. Callie, go grab yourself some wine. Okay, you like the game, Kat? Great.
I'm surprised by that, Callie, given your past history.
Meaning in business, not because of anything. Yeah.
Okay. Good point.
Yeah, clarify that. But so I'd love to get onto some strategy stuff. It would be very remiss of us if we didn't update you on JobKeeper because that is such a big issue at the moment. First of all, last week you'll remember we talked about the updates to the different structures in JobKeeper. We've actually updated our JobKeeper fact sheet, and while we were updating the JobKeeper fact sheet, we had to update the updates 3 times.
That's you whining. How about you have a drink? But
that went out today. Oh, okay, yes, they're cool. So that went out today. And we'll also upload it to the hub. We need to quickly talk about the extension for JobKeeper now, and this literally was something that our clients told us about while Mick was, advising on it because she'd read Donna. Big shout out to Donna, had read the update in the legislation before Mick had actually got to it as well. So we want to talk about that. Then we're going to focus on giving you some clarity finally around the turnover test. So we want to be able to give you some some guidance around that because that's been the big one.
Yep.
For a long time, we haven't known what the turnover terms were going to be. Look, I'm still going to suggest that it's clear as mud, but we can at least make maybe the mud a little bit thinner for you today. So
I think it's a lot clearer depending if you're using the alternative test. So
all right. Okay.
All right. Thank you.
I'm out. You're in,
cool.
and but please, because otherwise I'm going to have nothing to do. So let's if Mick has any complaints or rolls his eyes or anything like that, let me have it.
See, I'm so positive already. Right. This is changing behaviour. So
no, Ash, I promise I'm not already pissed, but I might be on my way. I've had 3 sips.
All right, so I'm going to try and keep the script. I can tell I've been blindsided here with the wine, and I'll try and keep the script. Okay, so JobKeeper yesterday, late yesterday or early yesterday, the Commissioner had an extension for enrolling for JobKeeper from Thursday, which is the 30th of April, to May 31st. So you can enrol for JobKeeper up until the end of May and be backdated till the end of March. Now, I had a good point from Mike about JobKeeper. The JobKeeper starts from the 1st of March, as in that's the test period you can use, but the actual payments for JobKeeper don't commence until the 30th of March. So it's a 6-month term from the end of March till the end of September is the term of JobKeeper, 6 months, but you can use March as a test period if you've had a 30% decline. So it can be a little confusing. So that's what those dates are all about. So I'll be brutally honest. I was looking forward to Thursday. In fact, Friday, I was probably going to drink for the first time in 4 years because the 30th of April had come and gone and all the registrations for April had been done and dusted. But now we have another extension till May. That's a good thing for our clients. So, if you haven't quite met the eligibility test or the turnover test, which we'll run through today, you've got a bit more time, which is May, to see if you pass and get backdated to the 1st of April. However, you do need to meet the payment cycles. So if you're not aware, just quickly, you need to pay $1,500 per fortnight per eligible employee. Now, there's set fortnights in the JobKeeper system for 6 months. And the 30th of March is the start of the first one, and it ends on the 12th of April. The second one ends on the 26th of April. So you have to have paid $1,500 in each of those fortnights and every fortnight going forward to be eligible. Now, that's a bit of a tough stretch given that we're at the end of April. 26th of April finished Sunday. and you may or may not have met the 1,500 in that time frame. So what the tax office did yesterday was extend meeting that criteria till the 8th of May. So what that means is if you haven't paid $1,500 per eligible employee, are you thinking I'm whining the way you looked at me then?
No, not at
No?
all. I just went somewhere else in my head about JobKeeper. I was thinking about something I might bring up.
If you haven't met the $1,500 till the 12th of April and then the 26th of April, you have until the 8th of May, if you think you're going to register, to top up the $1,500 per fortnight per eligible employee. So that is very positive.
Yeah, it is. Look, it is really good news. And Mick, and what I was thinking about then was how you actually said a few days ago that they would be absolutely rotten if they made everyone stick to that time frame, because it was just so hard for people to get their heads around that it would have been really unfair. So it is great news that they've come through and provided those extended time frames. So.
Yep. So I have a question. Does the tax from JobKeeper that you withhold on your employees' wages stay in the business because of the booster, the economic boost by the government, the stimulus package announced a month ago now? In theory, yes. It depends if you've already used your $50,000 until the end of June. So it depends on how big of an employer you are as to whether you've already used your $50,000, if that makes sense. So every employer doesn't have to pay up to $50,000 until the end of June, and then they get another credit from July right through to the end of October of another, if they've used $50,000 or whatever the June period was, you get another credit for the same amount post-July, right? So if you haven't used your 50 or whatever the credits are that you withhold up to 50, yes, it does stay in the business. So it's going to depend again, Mike, on your situation.
You guys have never been more valuable, have you? You're really earning a strong. Well, I reckon since GST, it's been the biggest change since GST.
Look, I'm not, my beard's showing my age a little bit here, my salt and pepper, but, I think this is one of those times where legislation has never been so updated so fast every couple of days, and then it's so many inquiries about it just because we're all in lockdown, sitting in isolation,
and
bored,
it's confusing. So,
drinking wine.
And how does it apply to your specific situation? Because the legislation's quite broad, but it really does take, looking at everybody's situation. So,
there's a lot to take in. You've got the taxpayer-backed loans. You've got, which we covered last week.
Anybody successfully had their application successful for the loan at all? Be lovely. Oh, great, Mike. You've had a verbal yes. Well, when
you need to see the dollars, Mike.
Yeah, you are our first that we've heard
verbal.
of. So that's fantastic. Congrats. All right, we'll talk more about that on Thursday.
So there's the taxpayer back. There's up to the 100,000 or 20 to 100,000. So another verbal. Good one, Ash. So that's cool. And now we've got the JobKeeper, which is very, very critical for a lot of business. There's been a lot of permutations, ifs and buts and whatever, but I think earlier last week, we had a lot of clarification and even a couple of days ago around the turnover test. It was getting clearer, but we had some more direction based on a week ago. So essentially you've got two tests, and I'm going to try and get through this as much as I can.
We are putting together another fact sheet on this, which we'll get out within the next 48 hours.
Yeah, given we're already 15 minutes in and we've got half an hour to go, I'll try and get through this. But there's two tests, the basic test, and I'll run through these. Basically, the basic test is where you compare 1 month or 1 quarter to the previous year. So
this is the first test. There's two tests, a basic test and an alternative test?
Yes.
This is the first test.
The basic test is relatively easy to explain.
Is it basic?
Not basic.
Sorry, I've made you lose your train of thought. So basic test,
you can use,
most people are going to be under the basic test.
Most people are under the basic test unless they have a change in circumstances, or they've restructured their business, or they're a new business in which the alternative test pass is the one that you use. And there's 7 different categories for the alternative test. But back to the basic test. So this is critical, and I'm going to say watch this space because it's very interesting, because they're saying that you only need to pass the test once and then you get JobKeeper for 6 months, but you are reporting every single month once you have registered for JobKeeper what your turnover is. Now, they're saying that that's because they want to see if the JobKeeper is effective with the ongoing reporting requirements. Now, I'm a little bit skeptical on that, because if you pass it once, but your turnover goes up for the remaining, let's say 5 months, should you have got the JobKeeper? But they want you to report it. So I'm very skeptical on that. And as I say, they keep changing legislation every couple of days. I'm sure it's going to slow down now. So I just think watch this space. If you pass it for a month and then maybe your turnover goes up, I'd be a little worried if I was you. And because we are talking a lot of coin here. If you talk about 10 employees, we are literally talking about $190,000 for 6 months that the government is going to physically pay you. So it's a lot of dollars.
I'm taking a little bit of a positive side on this one, and I'm thinking that, well, I guess if they can, if they're saying they're going to pay it for us for 6 months, I feel like they're going to kind of have to comply with that. But whether they give it to us afterwards for another 6 months, or depending on how things go, might, if it's not making a difference, then they're probably not going to do it again. Depending on how. I mean, we haven't come into flu season yet, so we'll see what happens.
We will. The basic test, you need to have dropped 30%. So you can compare 1 month to the previous month. So if you compare, let's say, March 20 to March 19, and it's based on your BAS, and not go into detail about BAS because I could be here for another half an hour on what constitutes turnover and all the details that go in and out of that one. But it's essentially taxable supplies that you do on your BAS. So if your turnover from March 19 month to March 20 month has dropped 30%, then you qualify. Now, you may, in fact, go back to normal from April right through to September and you still get the JobKeeper, but you have to report those numbers. So you get to choose a month, whether it be March, April, even May now. And if you drop by 30%, you'll get JobKeeper. You also have the option of forecasting forward. So you can forecast from, let's say, the 1st of April right through to end of June and qualify. So this is where I'm a bit, I tell you what does real estate say? Real estate say position, position, position. I'd tell you document, document, document. Use the 3 Ds. Because if you're forecasting forward 3 months and you're borderline on the 30% drop, you're going to have to justify, if you're ever checked, because again, it's like any tax legislation, you have to keep your records for 5 years. And if they want to check your JobKeeper income, and it's 190,000, for example, you're going to have to justify how you came up with that forecast. So, you've got to look at things like demand, whether you're shut completely, those that are shut that can't operate, well, that's easy. So you're going to have to look at what your customers are doing, whether they're going bust, supply chains, whether you can get goods and services and sell them, delays, a whole lot. So you're going to have to document, 3 Ds, and I've just come up with that. So I'm painting you that. So document all your forecasting.
Really just 1 D though. 3 times.
Well, it's 3.
It's the 1 D.
But it's 3 Ps.
It's 1 D to the power of 3.
I'll stop it. Drink. So forecast. So that's how you can get it.
Mike's just saying the wine's working.
Good question, Damien. You do quarterly BAS. Should you change to monthly to report for JobKeeper? No, you don't have to do that, because that is the second point about choosing a test month. If, let's say, you report GST on a cash basis, but you want to use accruals, which means that's based on invoices in a month, you can do that. So that means it's completely different from what you're submitting on your BAS. So you don't have to go on your BAS just because you report quarterly. You can substitute a month to get a decent test period to show that you've dropped by 30%. So, you might be reporting cash on BAS quarterly, but you might choose monthly, and you might choose accruals, which means it's based on invoice. So if you want to choose, say, March, for example, even though you might be reporting your GST cash for March 19 to March 20, you can have that test period as March on accruals, as long as you're comparing accruals and accruals. So document.
3Gs.
So what you've got to do is identify your turnover test period, which is what you've done. You pick a month that you think you've dropped by 30%. Have the comparison period, which clearly has to be a year earlier, a similar time period in the year earlier. Work out your turnover. So if you're going to do cash or accruals, you've got to take out the non-GST stuff, things like if you sold a property, that's irregular. You don't have to do that. You take out bank interest, all this sort of stuff. But we're getting technical now. If you need to know what you need to take out, talk to your tax agent or us. So you've got to work out your turnover. You've got to determine then whether you fall by 30%, right? So that's simply how it's done. You basically, you work through your test period. You look at a comparison from the year before, and you look at the turnover. So
there's really like those, what you said then, it's what I'm seeing is 5 steps to being able to pass that basic test. So do you want to dive into a little bit of detail with those different steps? Because I think that's probably important for people to understand what steps they have to go through for the basic test.
Well, we've pretty much covered the turnover. So you got to look at what your turnover was. You got to look at the comparison. You got to work out your GST turnover. And the GST turnover, I'll probably touch on that a little bit, even though I said I wouldn't. I've already done a bit of cash and accruals, but basically it's your sales excluding GST. But it'll exclude things like bank interest, share sales, residential income, because that's input tax. So if you've got BAS income you record for rent, you don't include that. Any private sales, you don't include that. Payments for no supplies. So if you start to look at a test period in the future and you're receiving JobKeeper, you don't include that either, because that's not GSTable. Excluding gifts and things like that. So, and there's also sales not connected with Australia as well.
So these exclusions, they specifically for calculating JobKeeper?
Yeah.
Okay. Yeah.
So this is where I'm going to whine and whine.
Oh, I felt like I was going to get a drink in a minute.
There you go. Go have a drink. I'm going to whine and whine because the legislation says look at your GST period or your GST sales. But, oh, by the way, if you're reporting on a cash and you decide to use accruals, why not use accruals? Yeah, use that. But then exclude this, and this, and this, which I've just run through. So it's not really as simple as use your GST sales, right? Yeah, it's crazy.
Okay, another one for crazy.
What do we do with a business that doesn't pay GST? No, it's just a GST free supply, but it's in the GST calculation that's part of your business, Mr. Damien. So just because you don't pay us GST, it's a GST free supply. It'd be like a supermarket selling milk. That's part of a GST sale. It's just free and it's included in the sales. So yeah. So I've covered cash or accruals, and for some instances that we've been working through, your GST might be done on a cash, but that's not a good comparison if you want to compare the year before, because accruals or when you invoice is probably more relevant, because some businesses have 30 or 60 day as a standard payment terms in an industry such as building. So they might want to use accruals, which isn't related to their BAS again, so wine and wine, even though it said use your BAS. You might want to use accruals, even though your BAS is on cash, because that's a better consistent indicative nature when you're comparing one test period to a year earlier. All right, I need a drink of water, and then I'm going to talk about estimating your projected turnover, because we've had a lot of questions around projecting GST turnover.
Yeah. And I think, projecting is always it's always difficult because it's not an accurate science, but this is the only way that we can do it, isn't it?
Mm-hmm.
Yeah.
So on one of the other webinars, I talked about caution, like caution. So if you've got a lot of employees that are well below 1,500 a fortnight, and you think you qualify and you're going to project and hopefully pass the 30% test, we've been given a bit of leeway, as I said at the start, from the April months to pay by the 8th of May. But, you know, if you've got 5 employees that you have to top up $500 or $1,000 a fortnight, which is $5,000 per fortnight, or $10,000 over a month, and you do your forecast and you don't pass and you're not eligible for JobKeeper, you've paid them $10,000, which you'll not get back.
And you haven't had to work for that either.
No,
the additional
so
work. So
they've just got
risk.
the money. So it is a massive risk. And I said get a bank loan, but don't get a bank loan because you're not getting bank loans, even though people have got verbals. I haven't seen anyone getting your dollars yet, so have a wine and wine.
Yeah, okay, this is true. He just whined, didn't he?
The
bank have said yeah, anyway.
So,
Mike, you'll get it.
You know, I think when you do your forecast, that's why I say 3 Ds. Document, 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 right? And I'm going to run through some things you need to consider for the remainder of the period. The period you're not expected to trade now, geez, I'm going to whine about that too.
So this is something you have to consider, you mean?
Yeah, when you're looking at your projection, like really, do we even know from the government the 11th of May is the next test and are we going to be lifted to stage 2? Like, how do you project? Really? How do you project when you don't know what the government's doing and they're probably still finalising it? I mean, if you're a gym owner, if you're a dentist, for example, you're probably going stage 2's coming, so I can realistically expect my turnover is going to go up. But if you're projecting, assuming that it's going to still be at stage 3, I'm not sure that is a reasonable assumption if you're projecting on that basis. So, you know, you got to look at whether you'll be closed, partly closed, and you're not getting supply chains because they're closed, and what these restrictions will have on you.
Or half teams, like a lot of the suppliers, they're still supplying, but they're putting in only half teams. So they're getting through half production.
Well, that's right. You know, can you actually meet your client's demand? So your turnover might drop just because your supply chain's not up there and you have put people off and you can't meet clients' expectations. So you've got to look at your recent trading patterns and are they expected to continue as well? And any revised business plans. Now, wine. This is very general stuff. Like, really? That's why I'll say document, document, document. Because you need to have a realistic basis for how you came up with your projections.
They have to accept.
They have to accept. So it's so you can project the I guess the extension's been very helpful because now, as long as you meet the 1,500 per fortnight, you basically get to the end of May, and if all your employees already get 1,500 a fortnight, you're in a very good position. Yeah. You can go, okay, I've got 2 months into this quarter, and I can get reimbursed 2 months and register at the end of May and be back paid to the 1st of April. So in some instances, it's very, very good if you've got employees already getting 1,500 a fortnight. On the other hand, if you've got a lot of casuals, I'm going to whine and whine. Jesus, be careful.
Jesus into it.
Sorry. So the reasons for your prescribed expected fall in turnover are not limited to the impacts of corona either. So that's an interesting comment, meaning that it doesn't have to be corona related. Anyone I can think of off the cuff is, you know, you could still be a milk bar, for example, but they're probably doing a roaring trade right now.
Well, it's still I think we have to be careful here. It is still kind of coronavirus related because you might make changes to respond to coronavirus. So I guess what they're saying there is it doesn't have to be a direct effect from coronavirus, but you may make changes, and this is what I've been wanting to get into with strategy and things like that, but making changes to respond to coronavirus. So that will be, you know, changing your operations because of what's happening in coronavirus. I mean, you know, Woolworths and Coles with their toilet paper, that will be taken into account as well.
Exactly. So you then start looking at that. So document, and we get an extra 2 months to work out whether we're going to qualify. in a projected quarter turnover.
And you'll be helping people with that, won't you?
Definitely.
Yeah, cool.
And the other thing to consider is you don't have to register straight away. You can register, let's say, the 1st of July and get it for the remaining 3 months.
Yeah.
July to September.
But you won't get back pay.
No,
No back
because
pay.
you've got to always pass this 1,500 a fortnight and the scheduled fortnight dates. You've got to pass them.
Yeah. So.
Right. So then you've got to determine whether you fall by 30%. And a lot of people are making sure.
Or
that,
50% if you're turning over $1 billion.
Yeah, I've got a couple of clients on the
don't.
call that. No, okay.
We don't.
All right. So the alternative test. So that's the basic test because you basically have a comparison to the year before. You've got a quarter comparison or month comparison, and you can compare to the current forecast or actual.
I love it because it's like that's the easy one.
And this is where I'm going to people's eyes will glaze over, and hopefully the number of attendees really don't drop off. But,
well, not necessarily, because I think the alternative test is the bit that we've all been waiting to know, like the what ifs.
Yep.
But I did hear you talking to. I can't see whether Chris has joined the call or not today, but when you were talking to Chris about this today, I must admit my eyes did glaze over a little bit. So
right, let's get into it.
Yep.
So the alternative test talks is 7 broad categories, and you basically got to be a newly commenced business, meaning you don't have 12 months ago to compare to.
Well, that's one of the categories.
One of 7, yes. The second is a business restructure. So you've restructured your business somehow, or you've sold part of your business, or
acquired,
part,
yep.
Yep, or
they're probably the main two.
Main two, okay.
Yeah.
You've affected by drought or natural disaster. Well, that's obvious, that one. You have irregular, lumpy turnover, and it's not cyclical. So that means you've had
unusually lumpy.
Yes.
Unusually, irregular.
Irregular, yeah. And the other one is a sole trader or partnership with a sickness, injury, or leave. So by that, they're meaning small business where, for example, in your test period, which might have been a year ago. So if you, let's say, compare April, last April you were sick or you didn't operate your business and it's a relatively small business. So the turnover back then was low. So when you compare it to this turnover, even though Corona is here, you're comparing an irregular turnover from the year before because you were sick, injured, or on leave. So if the basic test doesn't apply because of those broad categories,
so you've got one if it didn't exist.
Yep.
You've got change in structure, so business acquisition or disposal. Also, if there was a business restructure, that means that the business is materially different now to what it was then.
Yep.
Yeah. So, that's and that can definitely happen. And we've got some clients where that is the case, where you can sort of say it's not the same business as it was in that period as it is now.
Yeah.
Also, there's the fourth one is the increase in turnover. And this was the hard one for me to get my head around. So can you explain that? It's like, well, if you increase, you can decrease and you can increase your chances of qualifying for JobKeeper.
Yeah. So if I can explain it like a bell curve, I love a bell curve.
I love a bell curve.
So what happens is, let's say 12 months ago, you might have been here. Sorry, you might have had a business, but in the 12 months from, let's say, March last year to March now, your business went up. It was just growing. It was in a nice growth phase. And because of Corona, and it was just steadily growing, and because of Corona, it's fallen off a cliff. So with a bell curve, it goes like this, right? So you end up with the starting point and the ending point the same. So you haven't dropped 30%. But if you look at what's happened with the business, if it didn't fall off a cliff,
you would have been.
If you compare some of the turnover prior to Corona and falling off a cliff, probably should have a whiteboard for this. But you end up being at the same starting point 12 months ago. Yet, if it wasn't for Corona, you'd be back up here, right?
So then technically you haven't dropped 30%, but you would have if everything was equal.
Yep. So what you then got to show is, okay, the business experienced a substantial increase in turnover. So this is one of the main tests people are going to use if they've had a lot of growth over the 12 months. And it is, if you grew by 50% more in the 12 months immediately before the test period. So practically, if you were testing April, which we're about to end this month now, and you look at April 12 months ago, if you've grown by 50% in the intermeeting period, so, you know, let's say last year you turned over $1 million, April 19, and you've grown to at least 1.5, then you've passed the 50% test. Then you've got to look at what the average is and see whether you've dropped. I'm not going into that.
No, don't go into that.
But you've got to have passed the 50%, gone from $1 million 12 months ago to 1.5, and now your turnover might be the same, but you have to have grown to 1.5 online.
It doesn't have to be a 12-month period, does it?
No.
It could be 25% in a 6-month period. Is that right?
Oh, you're stealing my thunder.
Sorry, darling.
Yes.
Here we go.
Yeah. Come on.
Stealing his thunder.
So then 25% over 6 months. So, you know, if we say that 6 months ago, so we're in April now, so what's that, October? October, you look like you were doing 100 grand a month, but you got to 125 a month in the average in the last 6 months, then you've passed the 25% test growth. And then the other one is 12.5% over 3 months. So let's say you're doing 100,000 3 months ago. 3 months ago, and then after that it jumped to 112,500. You've passed the 3 month test, and then you've got to look at the average, which might be 112,500. Have you dropped from 112,500 average by 30%, which I'm not going to guess at that. That'd be around 76,000. So have you dropped down to around 76,000? If you have, then you've passed the alternate test on the 3 month turnover. Right?
So there's some good generosity here. It's just confusing.
Yeah.
So again, you guys are going to earn your stripes here.
And some of the EMs, so use some technical terms, abbreviations, explanatory memorandum examples are very basic, but they give you an understanding about how it does operate. So I'm not going to encourage you to read the 13 pages, but that's part of our job.
What were you whinging about the 41 pages today? Was that something different?
That was the release yesterday.
Oh, okay. Yeah.
Yes. So you've then got, so we can look at some of the examples there and see if you pass. So I'd advocate, if anyone's relying on the alternative test, go back 12 months, look at your turnover every single month, plot it on a spreadsheet, whether you want to use accruals or cash. So I'd plot it out, make it easy for your accountant, put it on a spreadsheet, accruals, cash, look at the turnover, and then we can start to do some analysis, whether you've gone up 50% in 12, 25 in 6, and 12.5 in 3 months. So look, there's probably not a lot of clients affected by drought or natural disaster. However,
so that's the 5th one. So 5th one is if the business was affected by drought or natural disaster, you know,
bushfires.
Yeah, exactly. That's what I'm thinking of. There will be some that have been affected definitely by the bushfires.
Mm-hmm.
And then you've got that irregular or lumpy turnover, but it has to be a regular or lumpy turnover that is not cyclical or regular seasonal. So it's not, you know, a lot of businesses have lumpy cash flow, but that's anticipated. It's unanticipated.
Like you might have an extraordinarily large contract 12 months ago for whatever reason that hasn't been repeated.
Yeah.
So that would be a one that you could use when you say, okay, 12 months ago I did 500,000 in the month. And if I look at now, I do 200. Whereas if you took out the lumpy 200,000 in 12 months ago, because it was an extraordinary, it was technically 300, and now you're 200, you pass. So, you know, there's these things we've got to work through, and I'm going to use it because I don't know how real estate agents get away with 3 Ps. I'm going to get away with 3 Ds: document, document, document. And I think with the sole traders and partnerships, we that's almost self-explanatory in that, you know, they tend to be small business or micro in a lot of respects, and you have to obviously prove that, you know, 12 months ago, and it's going to come into some of the other figures as well, post 12 months ago, if you're comparing that, what happened to your business if you're comparing a test period, and why, as to why it was impacted by sickness, leave, or injury. Yeah. So.
That's it. That's the 7 alternate testing. So I think you've done pretty well. we've got, and we go, as I said before, we will have a fact sheet out to you as well, which will be able to be helpful. But so we've got the basic test, and we've had some more clarification around the basic test. But for me, even more importantly, having some clarification around the, you know, what is going to happen if your business is materially different than it was 12 months ago or didn't exist 12 months ago. So being able to have that that grey area explained a little bit better, if you like.
I mean, even if you just think about the basic test, you know, I think 3 or 2 weeks ago, it was just look at your GST turnover and compare GST turnover. Now it's moved from, you know, compare your GST turnover to you can choose between cash or accruals, which is still GST turnover, it's just how you're reporting it. And, you know, compares like for like. So there's been a lot of movement over 3 and 4 weeks on just the turnover clarification.
Yeah.
Once they announced the JobKeeper had passed legislation on the 8th of April, I guess that instrument just allowed the tax office, all it did was you can keep making rules, and shit, that's what they're doing.
So I get a whine, and we've just got a question there is, what if you pass more than one of those 7 areas? Okay, so you can choose then, can't you? Is that right? Yeah. So if you fall into more than one of those 3 categories, you do get to choose which one you that you want to apply for when you're doing the test. Now, how do people actually, what do they do from here if they are, you know, not passing the basic test but need to do one of the alternatives? Is there a form that they fill out, or what's going to happen there?
No form, just document. So you got to come up with why and how. So this is the 5-year keep your documents. This is how did you come up with your forecast, or how did you pass the alternate test? So it's going to be a case of you need to have documented if you come up with your forecast, all your assumptions, as we call them, in your forecasting, and why you did that. Because the challenge will be if you use some assumptions that just aren't right based on our current knowledge of corona shutdowns, you know, state restrictions, what other states are doing, those sorts of things. And you end up being business as usual. Well, really, what's the tax office going to do? And they want you to, you have to report monthly. So what they do with that data might be, and I'll say this loosely, a trigger for a review over JobKeeper, because we are talking, in my language, just to sidetrack a little bit, this against the small business active assets and concessions when you sell a business. You know, you can sell a business for $1 million gain and pay no tax. This, which is 500,000 potentially no tax in a lot of instances. This is the next biggest thing ever the tax office has overseen, so they're going to be active.
Yeah. I feel like the upshot of all this is, quite frankly, that JobKeeper has turned out to be a lot more complex than anybody anticipated, right? And there are serious consequences if you make a wrong claim. So, you know, in these sort of circumstances, please lean on us, because we can help you there. We are getting some information out over the next day or so as well about our JobKeeper service. If, you know, we just sort of thought at the beginning, oh, people can just get on and do this themselves. That's actually going to be really quite challenging. So we have put together a JobKeeper service that we will send you out information about in the next day or 2, because it just hasn't turned out, and the risks and the consequences, quite unexpected.
Yeah, one thing I haven't mentioned is if you do forecast and you actually turn out to be pretty much on your forecast, you're okay because you pass the 30% test. The issue is going to be if you forecast you drop by 30% based on your assumptions, but in fact you drop only by 20 or 10%, and you're reporting this to the tax office. That is probably going to be the reason for the monthly reporting and potentially the reason for the review. Now, the beauty of the test periods, and I'll give them credit for this so you can suck back some wine into your glass, is that you can have a test period of a month or 3 months. So a month, if you drop by 30%, then in theory you keep your JobKeeper for the next 5 or 6 months. So, you know, it's not as erroneous. If you're forecasting because you want to get it from the start, from the 1st of April, and you're forecasting you're going to fail for the first 3 months because you want to get it from the 1st of April, as opposed to maybe waiting until May or June when you actually do fail, that's probably where you're opening yourself up to potentially being looked at.
Yeah. I'm conscious that we are at the 46-minute mark, and one of the things that we want to be able to do here is keep things concise for you, because there is so much information out there. I'm actually really hoping that there aren't too many changes in the next week, because what I would love for us to do is to get some strategy for you as well, some business strategy, not just the stimulus information. So hopefully we do get a little bit of a break there, and we can wait next time.
You can have some wine, Karen, because I'm about to say you just want to talk. I'm the one talking all the time.
No. Well, I think you've got a lot to say in the strategic area as well. We've both got, I mean, we were made for this, you know, like this is what we need to be able to do, is leading business owners through a time like this. And we can do that. Yes, one way is to interpret what's going on now. And I think that is super important and really what people want to know. But we can also help people with, you know, growing their business or stopping the leaks in their business. And, you know, I'd really like to get onto some of that for people as well. So hopefully next week we'll be able to do that. But of course, if there is a big
slashing
change,
your overheads, all these sorts of things. Yeah.
If there is if there's a big change, then we will certainly be on top of that as well. So
I guess the changes now are integrity measures, as we call them as accountants, to make sure people aren't rorting the system.
Yeah,
so
right.
This is what's coming, right?
Yeah.
To answer a question, how do you account for JobKeeper? It's income. Create an income code in your profit and loss. That simple. It goes in as income. So this is the thing about JobKeeper. If you get it, it's taxable. So you're not getting all of it. There you go.
All right, so we'll jump off now.
Assuming you're making money and paying tax.
You'll all get a copy of the recording tomorrow as well. We'll put the fact sheets. Please jump onto Facebook if you've got questions, or you just want to have like a little bit of a rant, or you just want to share a win or something like that. Please jump into Facebook. We've got the dedicated Facebook page to that, and that's, you know, it's not often that you do get access to Mick and I like that. So please just, you know, use this and abuse this at the moment. Who knows when it will end? And we've loved chatting to you again today. Thank you very much. Thank you for the feedback. We're getting some really great feedback in the chat box right now, and thank you very much. We will see you again next week and be in touch with you before then as well. So, lovely Alicia, thank you very much. Big shout out to Kingsley. He couldn't make it today. I do want to point out, Kingsley, that I'm still a bit scared to go to the hairdresser, which is why my hair is currently looking like this. All right.
So is mine. Look at it.
Oh, yeah.
Just for men. Just for men.
Grizzly Adams. All right. Well, we will see you guys later. Lovely to see you all. Thank you so much for the feedback. Have a great week, and we'll see you again Tuesday, 5 p.m. Bye. See you later.